BTCCryptoAnalysis.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello again, everyone. Welcome back to the RationalInvestor.com's daily brief recap video. Hopefully this is a nice half hour or so. Might even try and make a little less. We do have our CTO, Sjord, on the call here for the after party. And of course, his wife puts the pannacooks on right when we start these things up. So if he's overtime, he eats burnt pannacooks, which sucks. So got to be fastidious with fastidious. I think that's a word. No. So anyway, got to be prudent with the time here. All right. Yeah, as you point out there over there on YouTube, DMAC, it is pancake day today. And I see Nori's over there. So nice to see our regulars tuning in. Yeah, hopefully I can give you some value here today. The problem is that we're in a very, very tough time in sort of the economic cycle. Unfortunately, they have an old expression, do not fight the Fed. Don't fight the Fed. You ever heard that before? Write it down. If you haven't heard it before, of course, our regulars probably hear me say it constantly, day in, day out. And, interestingly enough, we got about 6 months or so here until the halving event with Bitcoin, which I think probably was done on purpose every 4 years. And basically, that's the same as the money cycle, the short-term interest rate cycle. Usually that 6 months around that halving event window, it can be pretty darn choppy. I mean, last go round, they manufactured a global sickness to try and justify massive bailouts, which of course has led to the hyperinflation that world that we're living in right now. Thank you very much, 1%. And actually, I even had a nice little jab at the Canadians today. Because what pisses me off probably the most about all of this is that when times are good and markets are up, nobody listens to you when you're like, you know what, this has got trouble written all over it. Jupiter, Saturn, cross, be careful. And, you elect leaders that have absolutely no financial experience. The most experience they have is seducing underage girls in boarding schools in Vancouver, British Columbia, Canada. Get myself into trouble for saying stuff like that, I suppose. But anyway, our dear leader always avoids those questions whenever brought up in the House of Commons. But Canada, holy moly, the bond market's collapsing here. I mean, it is like literally going into free fall. Of course, it looks to me like we have a pretty well-defined head and shoulders top here. And if you look on the broader picture, of course, we were joking in the lounge about how the Canadian dollar actually looks like it's starting to tip over. And that's been my thesis all along, is that interest rates are going to go up here. So either one of two things happens. Either the Canadian government continues their idiocy with the money spending. And of course, the finance minister has no experience. She doesn't even know who Milton Friedman is. So their solution is just turn the printers on. You can print your way out of the problem. But nope, sorry, the market doesn't like that at all. So we either have one or two scenarios. The printing press gets turned on and interest rates are going to go through the absolute roof because of the hyperinflationary policies of this government. Or scenario number two happens, and actually, well, I've finished scenario number one. The Canadian currency itself is in trouble here. And I think I've told you guys repeatedly that this Canadian currency could be in a world of trouble going forward. This to me looks like a bear flag. So A, B, C, D, that would take us down into the mid 60s. Which I think is completely doable. The issue here on a longer time frame is you can see we have massive bearish M top. What are you supposed to think when the market's smiling at you? So fantastic analogy of that. But this is now like trend continuation trade. So the ultimate destination for this currency looks like about 45 cents versus the US dollar. And that would be predicated on the idea that the US is trying to control its money supply. I think to a certain degree, Mr. Powell was embarrassed by all these MMT people and the Klaus Schwabs and the Justin Trudeaus who are, just print your way out of the problem. You can, oh no, we'll never see high interest rates again, which is a total trap. And now he's trying to get a little bit of religion and trying to sort of rein things in down in the States. And also, too, there is a fairly large sort of contingent within the US government that would like some fiscal austerity, even if it does mean that the wokes are not going to be able to get multiple nose rings. They're only going to have to live with just one nose ring. But anyway, that's Brian being facetious. Point here is this Canadian dollar is either A, they let the market correct and the housing bubble in our country pops and housing prices come back down to affordability levels. And we start, we're going to have to go through a pretty nasty economic, probably depression. And of course, all the baby boomers will be upset because their house prices are falling and they're not as rich as they think they are. Or B, they continue the fugazi and the idiocy, but the interest rate market keeps cranking higher, and the Canadian dollar gets absolutely destroyed in the process. It's going to be fascinating to see how this plays out. Either way, very, very difficult times in the market. Interesting too, of course, if you listen, I mean, the best part of, I mean, this is my whole career. So if you just listen to the breadth, you probably, with regard to the broader market, you'd probably be just sitting on the sidelines here since about the end of summer. And the irony of it all is that, I even tell the level 1 students when they come in, very first thing I want you to do is read the Market Wizards books. And one of the interviews there, this guy famously goes in and he buys like S&P 500 put options every middle of August, like religion. And of course, he comes back into the office the middle to the end of October and buys them all back at huge profits. So really, there's nothing out of the ordinary that's going on here. This is so business as usual. It's almost embarrassing, like the whole financial crisis, great financial crisis, Lehman Brothers going under, blah, blah, blah. That was all basically, sell, buy your put options, whatever, the middle of August and cover them back for a fortune in October. I mean, very normal. No buy signal here whatsoever. I mean, yes, we have the fast pointing back up, but you can see the moving average relationship, and we are still technically oversold here. As well, too, I think it's not a bad idea to use the histogram to try and help you see when the market is completely and utterly washed out. You can see, of course, the shit show in China continues. Hearing more and more talk about not only the internal economics like Evergrande, they got great stories, the rise and fall of Chinese capitalist empires, blah, blah, blah. I mean, it's so business as usual. It's ridiculous. But actually starting to hear that like the Chinese, the 1% CCP, whatever you want to call them, I think they've made a conscious decision that they've sucked as much money out of the rest of the world as they possibly can. And now they're starting to close in on themselves, starting to close borders. Thought it was interesting going back to substitute drama teachers. Now we have this big row with India, and India is basically expelling Canadian diplomats right, left, and center now. So in a weird sort of way, we had like the pendulum swing for like 20 years in one direction. And now that pendulum is starting, it almost feels like through the sickness and then through the lockdowns over there in China and stuff like that, the pendulum was losing its inertia, then came to sort of a stop. And now you can feel the pendulum is starting to swing back the other direction. So enjoy the ride, folks. This is going to be a really bumpy next 5-10 years for us, no doubt about it. With regard specifically of markets in the short term, that's all sort of big macro kind of talk. In the short term today, try to be a demonstrator of best practices. I was actually up really, really early this morning, and journaling like a son of a gun. You can see how much journal entries I had. I've decided in this particular trading plan and stuff, I wanted to demonstrate best practices, trade one setup, trade one plan. And if I'm not on the ball for the entire month, you get like 1 or 2 days that actually produce trades that it's like, wow, that makes my month. Today was one of those kind of days. Didn't really have any setups for them, but you can see how busy I was making notes. These were all basically potential trade setups that I could have taken, but weren't part of this plan. Too close to the VWAP. Like this particular plan wants to hunt setups at extremes. This was actually a really pretty setup. This was even on nice single ticks, which is a concept we teach in the level 2 program when we do volume profile. And it was also off of one of Hoag's weekly kickoff levels. That was just an incredible setup. They even flushed the overnight lows there. We also had a railroad tracks that was just too big of a risk for me to take, but railroad tracks through the opening range trade there on crude oil, and you can see it produced quite a trade. And really, all they did was they just dumped the market into the original 30-minute market structure trend line support line. And like I said, that was Hoag's weekly kickoff level. It was just a couple ticks below the overnight low. So they ran the stops, the whole damn thing. I mean, just really, really cliche. Lots of good notes that I took today. That's definitely for certain there. Um, Crude worked its way back up, pretty nice rally, which in itself sets up trend continuation trades. And so I went into bot hunting mode. And of course, my bot likes to have 3 higher lows to work with. And you can see what they did. This is a testament to how difficult this market is right now. So straight up V top. I mean, there was no M for me to short up here, which would have been nice. I was mapping that out, but it never came in. So V top, market corrects. Notice, look at that. They went after the lows. They took the lows out by like 1 or 2 ticks and then like literally straight up. My bot, I want to see 3 higher lows to work with. So again, very difficult trading conditions. This is like literally V top, V bottom, and now we're screaming up. It's interesting. We actually come up into a trade location that I would be interested in here, but I have a very strict rule, and you can see how I wanted to see this set up. I haven't seen that set up yet. We've got 4 potential divs. I want to see these divs all start to confirm. And then what I really want to see is a nice little M structure top up here to frame my risk. And actually, I can think about that with the VWAP all the way down there now. There's probably going to be a trade that sets up here. But the problem is, of course, is that we're now getting pretty late in the session. And my hunch is probably for the rest of the session, they're just going to bob and weave it up top here. And there won't be one of these violent moves like you usually get at the beginning of the North American session. So didn't really do anything in crude oil, but I was actually really proud of myself because I took notes like a feverish son of a gun, doing lots of screenshots, taking lots of basically notes, talking about the news events, was right on the ball, and just basically demonstrating best practices. If a setup had come in, I would have pulled the trigger, but just nothing set up for me. Looking at the bigger picture, just a quick boo. Interestingly enough, ES, the stock market, I actually thought we were coming down into a trade location here. I was very interested. Usually at my ATR range, I get some sort of play. We're also against horizontal support and resistance. So I was quite interested in the stock market, but gee whiz, they're just tearing the stock market a new one here. And I think I just did up a chart for the daily weeklies on the ES here. Where are you, ES? There you are. Nasty, nasty price action. So there, actually, where should we start this off? Why don't we go back over here? So ES, Yeah, okay. So you can see now they're carving out a nice inverted head and shoulders. There is that ATR level. They had one more FU down below. And interesting, you can see all the divs starting to come in here. So I actually wrote up this morning in the journal that I was quite interested in hunting longs down here on the stock market. I actually thought that we were coming into a level here. And at this point, now I need to get into sort of hunting for divergences. You can see at this point they were potential. Now those divergences have started to confirm. So you can see the divergences confirmed here. And I think you could actually make the argument this looks like an inverted head and shoulders, eh? So, ironically enough, for this top step combine, I'm only trading crude oil. I just want to stick it to one market. I don't want to be jumping all over the place. But I think you could make the argument there's probably a nice inverted head and shoulders that's set right up off that ATR level. And you can see where the VWAP is. So, just getting a nice dead cat bounce into that level. I mean, just head and shoulders itself. It's basically a measured move. So you can project the distance from the head back up to the neckline and then project that off of the neckline heading up top, and that'll give you your price objective. Somewhere around there. Of course, I can never get these silly drawing tools to work on cue. All right, so there to there, there to there, and that'll take us up to the VWAP. And interesting too, what it probably is going to do is bring us back to this previous market structure fail level. You can see there was quite a fight right up in that level there. So a nice little stab up into this area here, I think would be perfectly realistic. The only question is, we're getting kind of late in the day. So do they just sort of park it here for the rest of the North American session? There's only, 3 hours left, 3.5 hours left. But you never know in this crazy trading game. I suppose that anything could happen here. But it is interesting to see how, yeah, indeed, I think they do want to try at the very least to put up a fight off that ATR level. The other markets, of course, we like to follow sort of for the day trading purposes and give you an update report. The gold market, geez, just can't buy a friend these days. We are at 8s and 9s on the dailies, and we did hit a pretty big bearish AB equals CD objective. So down against these lows, I could actually start thinking about longs. There was also this other AB equals CD objective. So we're right in that, like in the no man's land between two A, B, C, D objectives. Look at this insane volatility. Remember I was telling you about the crude oil, same sort of thing. V tops. I mean, look at this, just a shooting star top, then melt it down. They go after the stops, put in an engulfing bar, rip it straight up, go after the stops on that shooting star up top there, then rip it back down, wipe out these guys. I mean, what this looks like to me is that this is an environment where the trading bots, the algorithms, stuff like that, they are just eating retail's lunch here. There really wasn't a heck of a lot of news. There was a couple of news reports that came out earlier today. Sort of starting off the day, not really a lot to, really hang your hat on. Interesting to see Japan, of course, China crap. Japan got absolutely smoked there overnight. US futures are treading water. The econs that came out today, they really weren't earth shattering. We did have one Fed speaker this morning, Bostic. I'm sure he probably got everybody worried about interest rates continuing to head higher. We had the JOLTs job openings report, and we had Investors Business Daily economic optimism. This came out an absolute train wreck, and I guess it makes sense. So, oops, let's update that. Not quite sure why that didn't update. Just try and keep the list relatively short. So 36.3, market was looking for 41. Previous was 43. That's a pretty big drop. That's like, 15% drop there. So that didn't go over very well. And the JOLTs job openings, 9.6 million versus 8.6. Basically, the market was looking for, and the previous was 9.2. So a lot of job openings. Is that people are just not bothering to go and get a job in this screwy, messed up world? I don't know, but the economy still has a lot of demand for workers. I mean, you can see this is kind of what the Fed wants to see. But this uptick here, this is not what they don't want to see. So I'm sure the market looked at that and went, well, if we maybe had a really negative report here and lower highs and lower lows, maybe the Fed could just cool it on raising rates. The fact that we had this big ramping up, businesses are looking for job seekers, help wanted, that kind of stuff. And that's got to say to Jerry, you got to keep rates higher for longer. So you look at this kind of backdrop. I mean, it's just a horrible situation here. The confidence around the economy is waning. Businesses still need workers, and they just can't find them. So as a result, we got a situation where it looks like interest rates are going to continue working their way higher. You can see right across the board. And actually, it was interesting earlier on. We actually had a bit of a reprieve in the short-term interest rates. It looked like maybe because the 2 years, they often follow very closely Fed policy. And also, too, a lot of stock market people, they will just simply either be in the stock market or be in 2-year treasuries, which is basically the same as the money market rates. So it was ticking up here, but you can see when those econ reports came out earlier this morning, the long end of the curve just puked right out, and the short end looked like it was going to hang in there, but it looks like it's joined the party too. Not too as much damage, but you can really see the longer end of the curve is really starting to roll over here. Ironically enough, that's actually probably what the Fed wants, is they want the yield curve to go back to normal. And we might talk a little bit more about that in the after party. One market, all right. So one market that really jumped out at me today, I was quite surprised, but I guess it makes sense. When people start losing confidence in the U.S. economy, and i.e., you buy the U.S. economy, buy the U.S. dollar, because the rates are going to be competitive and they're going to be, the economy is still strong, so they can justify higher rates. And of course, you still believe in the U.S. Economy. Well, that all goes to rat shit if you start seeing people bailing out of the US dollar and running into the Japanese yen. And I was quite surprised to see this here this morning. I do believe that this thing's trying to turn the corner here. I'm not quite sure why this chart's acting the way that it is. There we go. What the hell's, oh, must have, am I working off a, oh, I'm on the wrong damn chart. What a doofus. Okay, let's try this again. I shouldn't screw these charts up. All right, leave that on. Oh yeah, look at our head and shoulders trying to break out here. Looking at the Japanese yen. This would be a vote that, hey, we're starting to lose confidence in the US Federal Reserve. So we're going to go bury our head in the sand and just park it in Japanese yen. Because that, we have no confidence in Lagarde. I mean, I don't know what the hell they're doing over there, but Europe is an absolute train wreck. And if they lose confidence in the North American central plant bankers, you're not going to go put your money in Winnie the Pooh land. That's just idiocy. But wow, people came in hard here on the Japanese yen here this morning. So that in itself is an interesting sort of message from the market. And I had suggested to people on this site, pay attention. If you're looking for a trade, I got a funny feeling this Japanese yen, we're right down against historic lows. And you notice that, indicators are starting to go into divergence. Willie's stupidly oversold on a weekly basis. And hell, we might even get a contraction on Sjord's Bollinger Bands on his RSI study. They're still pretty wide, but you can see them contracting. So we might be going back into an environment where the Japanese yen is actually relatively attractive. I don't think it's a buy just yet because we went to new lows here recently. But if W's start to form here, I wouldn't be surprised if we get like a wholesale move out of North America. And of course, we talked about it. Well, there goes the stock. So indeed, that Head and Shoulders is working. But we talked about the bonds and interest rates. Are they just wholesale selling the stock market, selling the bond market? This US dollar index has gone an awful long way. Is it maybe time that this thing just calms down a little bit? There is your chart. And where are you going to go put your money? If you're not going to have it in the US market because you think maybe the US market's got to calm down, you see where 38.2s are, you see where 50% are. You're not going to go give it to substitute drama teachers. That's just stupidity. You're not going to go give it to Winnie the Pooh. That's even dumber. You're not going to go give it to Vladdy. I mean, that's just idiocy. So where are you going to go put your money? And if the Japanese yen starts catching a bit in earnest, it means that even North Americans are starting to lose confidence in this North American economy. So fascinating times we're living in here, boys and girls. I'll tell you that much, crackers. Signs that maybe the market is finished going down. Probably want to see these things M out. Does this inflation picture look like that it's slowing down at all? Then, why are people running out of the US dollar and Canadian dollar and running into Japanese yen and maybe even Japanese government bonds right now? Well, you see the inflation problem here in North America. That's not a good sign. And of course, the interest rates, 10-year US Treasury yields. I show you the bond prices. These are the yields. And of course, good old housing industry. I don't actually think the housing industry in the States is so bad, although that Airbnb story, that might actually be the reason why you actually have this supply demand imbalance right now. And if these mortgage rates just keep ticking higher here, which they're doing, you're going to hear a lot of pain from all the people that bought those Airbnb places. If the economy is weak and the Fed wants to slow things down, restrictive policy, so that people aren't going to be doing all the Airbnbs that they were in years gone by. And then all of a sudden, these people have to refinance all these purchases at horrendously higher rates. In fact, I thought it was interesting. We're now finally, it's a little sad, but it is finally happening. India tells Canada to withdraw 41 diplomats. Oh, we need an endless supply of immigrants coming into this country to keep the stupid bubble inflated. And now Canada and India are going to go to war. Oh, that's always a good sign. But it was interesting. And maybe they even, here we go. This article right here, I think, is absolutely perfect for the Canadian story. Although I can't even stand seeing these idiots on stage here because they don't know what the hell they're doing and they're just blowing the country up. But this article is all about how borrowers basically are expecting, and they're even saying that some people right here, more than 46% of Canadian mortgages have payment schedules longer than 25 years. Oh my goodness. They used to call this predatory lending down in the States. Now, for some reason in Canada, it's justifiable. Something's not right there. But what's interesting is they're finding that, there are little tells that this is actually starting to bite. Auto loans, credit cards, line of credits, delinquencies in these products are going up. And what will happen is it will be all of these things that get sacrificed. And of course, it starts sort of the credit unwinding process. And the housing market is the last thing because people don't want to lose their homes. But when they capitulate, you remember 2008, same sort of story. It can turn absolutely horrific. So the writing's on the walls, and this is exactly what I was fearful of. The only problem is because it's the housing industry, it will take probably 5-10 years for this whole damn thing to fully unwind. Anyway, happy, joy. There's a whole bunch of happy for you to chew on. Suppose the last thing we should probably touch on, and then we'll head on over to Panicook land. Good old Bitcoin. And interestingly enough, I was wondering what these guys were doing here with this rally of late. Of course, we banged into some pretty impressive technical objectives. On the lower time frames, the bullish bot setup was hit like textbook. I mean, this is why you have to have your AOC or order working at that level, because if you didn't have that order working, you missed the train there. But I think that that's basically played itself out. And then, of course, we have a face rip all the way back down here. Very violent, very quick. It's interesting off of the actual futures, because I do the futures summary as well here for my day trading plan. I actually got some really funny price action. You can see on this 4-hour chart, look at the size of that outside downside key reversal on a 4-hour chart on Bitcoin. Ouch. Look at these nasty reversal bars. I mean, I suppose there was a bullish one there off the 3 minutes, but that 4-hour one really jumped out at me, of course, and that was that ABCD objective. So, this is where futures traders, you can see 1 low, 2 lows, 3 lows, get long off of the 25, move your stop to scratch at 50, lock in profits at 66, have your AOCO order working at the bot profit objective, ABCD, ding, 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 you're filled, and then the price collapses. So I was just wondering what the hell's going on? Because remember, we had said that we need to see W's on other sides of trend lines for us to be a bull. So this was just like literally straight up into a profit objective and then straight back down. So what the hell's going on here? And I have a feeling that what's going on is this doofus is finally having his day in the sun. Brian, try and stay positive. It'd be interesting to see how he did in prison. Didn't accidentally hang himself. That's a bit of a surprise. But anyway, he's going to have his day in court. And I think that what's happened here now with price by them jamming it up here. And then remember too, we had lots and lots of reasons to look for the market to stall out up at this level. So not a big surprise. There were a whole bunch of reasons to look for a stall here. So I think what happened here was basically if you look at the momentum indicators, I mean, Willie is stupid. You can't have a trial that's going to dog Bitcoin and, talk about how, horrible the industry is with the market oversold, because that means everybody's sold. So let's get everybody in on the buy side. Everybody load up. All right, it's a new bull market. And now they can go through the process of breaking everybody's hearts. Everybody's long now. I mean, you went on social media there just even over the past week or so, and it was starting to hot up quite a bit. And of course, now we are no longer oversold. We're not really overbought yet, but you can see if we actually start breaking down in earnest, bearish divergences will start to form on things like MACD. It would be interesting to see if they can get Willie back up here stupid. But at the very least now, you can say that this market's no longer oversold. I still think we're stuck in a trading range. And of course, that's that conversation about the weekly chart, support and resistance. They ran it up to resistance. And now the question is, if this really is a bull, because remember, we said if this is a bull, we have to see a W on the other side of these trend lines. Actually, that should be a little crisper there. Did that actually? I think that came off of an original top way up top. Okay, so that's okay. I don't want to get mired in the weeds. We got to wind this up. So, really simply put, for me to be bullish on this chart, I need to see a W on the other side of that line there. So you can see we ran up to it. We pulled back. What an interesting coincidence. They pulled back right market into that support line. And if this is a bull, totally awesome. I want to be a bull, but I'm from Missouri, right? So you got to show me. Bust the trend line. Then can I please get a W on the other side of the trend line? And then I can start getting uber bullish. Right now, what I would just simply say is we're still stuck in this trading range. And probably now we're going to walk our way down this trend line from the other side. And as I said, if a W comes in, then we all get uber bullish. Until that happens, just cool your jets. Okay, think I'll leave the free report at that. That was basically about 35 minutes. So hopefully no pancakes are burnt. And yes, you're right, Frederico. Big part of this also too was the announcement of the ETF for Ethereum. Is that coincidental? Maybe they planned that a little bit to try and get everybody uber bullish here as we get ready for the soap opera to hit. Because I tell you, this is gonna. I saw that these bastards in California now are suing CZ, and they've created a class action lawsuit, and they are going to try and spin this that it was CZ's fault that FTX collapsed, and not this doofus for basically breaking every conflict of interest rule on the books possible. So the soap opera is heating up, folks, and it's going to be one hell of a wild ride here. So, all right, why don't we leave it at that? If anything, super excited to have Stuart on the call here this afternoon, or this morning, this afternoon for everybody back east. TRI website, man, we're producing some kick-ass tools. Definitely think this is worth the price of subscription. If you had just followed this S&P signal itself, that would, if you had like 5-10 G's in the market, that would have saved you the subscription price alone. But Sjord's also got a whole bunch of other fun stuff that he's working on, and super excited. Always like to have a report from Sjord here every Tuesday. To tell us a little bit about what he's seeing around his neck of the woods, which I'm sure isn't great, but I think you heard lots of rants from Brian on all the macroeconomic stuff today. But more importantly, ironically enough, I couldn't be more bullish for TRI. TRI's actually got all its ducks in a line, and we're actually getting everything all lined up. So way to go, TRI dev team. All right. Have yourselves a great day. PMA for the win. Slow and steady wins the race. Don't take no wooden nickels. Remember what your number one job is. All the best, and bye for now.